actually owns the domestic equity markets? While you and I might hold a few shares of a company or invest in the markets through mutual funds or ETFs, who owns the bigger piece of the pie? Well, according to the National Stock Exchange's latest report, promoters, foreign portfolio investors, and the government are some of the largest shareholders in the Indian equity markets. However, the percentage of ownership changes quarter on quarter and year on year. Now let's take a look at the 5 key trends that the evolving shareholding pattern of FY25 tells us. Promoter ownership in listed companies has dropped again in the March 2025 quarter, falling to a 7-quarter low of 50.1%. This marks the 3rd straight quarterly decline, with overall holdings down 1.3 percentage points in FY25 compared to FY24. Government ownership, which had risen over the past 2 years, reversed course in FY25. It dropped to 9.9%, its lowest in about 6 quarters, mostly due to the underperformance of PSU banks on the markets. In FY23, government ownership in listed companies saw a very sharp uptick following the listing of LIC. And in FY24, this ownership rose another 2.8 percentage points on the back of the strong rally seen in PSU and public banks. However, in FY25, the PSU Bank Index, where the government has a very large shareholding, fell over 10%, which led to a fall in the government's overall ownership in the total listed markets. After steady declines for over a year, FPI ownership saw a surprise rebound in the March quarter. FPI ownership has been on a downward trend due to a combination of factors such as COVID waves, a slowdown in China, rising geopolitical tensions, aggressive monetary policy tightening, especially from the US Fed, and more recently, uncertainties stemming from a renewed trade war following Donald Trump's re-election. However, the March quarter did surprise investors as FPI's share rose to 17.5%, higher from a 13-year low of 17.4% seen in the last quarter. This rise comes even as foreign investors have pulled out over $13 billion over the quarter. This bounce back was largely due to the strong performance of private banks where FPIs hold a major chunk of their investments. The Nifty Private Bank Index gained 3.8% during the quarter. FPIs do maintain their outsized long-standing overweight position in financial stocks, which is supported in part by the relative outperformance of private banks. However, these FPIs also retain the negative stance on consumer staples for another quarter. This is a trend that has remained unchanged for the last 24 years. Experts believe that this could be due to the persistent concerns over this sector's high valuations. Domestic mutual funds have seen a steady uptick over the last 8 years, highlighting the growing interest of retail investors, especially through the SIP route. Mutual funds shares rose further to a fresh all-time high of 12.6% in the Nifty 50, 10.7% in the Nifty 500, and 10.4% in NSE-listed companies respectively. Domestic mutual funds infused about 1.9 lakh crore into equities in FY25, the March quarter, taking the total net inflows to about 6.1 lakh crore for the year, which is the highest of any fiscal year to date. This strong momentum was driven in part by continued retail participation through the SIP route. For FY25, the average monthly SIP inflow rose over 45% year-on-year to 24,100 crore rupees. After rising in the previous quarter, the individual investors' share in listed companies dipped by about 30 basis points to 9.5% in March 2025, which is the lowest in about 7 quarters. The drop was mainly seen in mid and small cap stocks where individual investors have been more active. Large cap ownership did stay steady, while micro caps actually saw a sharp 1% rise in individual shareholding. March also marked a shift in sentiment as individual investors turned net sellers for the first time in months. Still, the total value of retail holdings remains high and well above pre-COVID levels. Individual investors, both direct and through the mutual fund routes, have significantly expanded their presence in the Indian equities, especially since the pandemic. The retail shareholding is growing at an impressive rate over the past 5 years, thanks to strong participation even during market downturns. So from a steady drop in promoter stakes and government holdings to a sharp rise in domestic mutual fund investments, India's market structure is evolving fast. Even with global uncertainties and local market corrections, retail participation, both direct and through mutual funds, remains a driving force. It's a dynamic landscape as investors understanding who owns what can give us deeper insights into where the market might be moving next. What are your thoughts on these changes? Let us know in the comments below and stay tuned to moneycontrol.com for more market updates.